Donald Trump just made a major announcement that could lead to the catastrophic collapse of the European Union. And it might seem like I'm a bit exaggerating over here, but the problem is that the EU was already going through a serious economic and financial crisis that has been actually being dragged for almost 2 decades. And now Trump coming out with extra tariffs to be imposed on the European goods, it could actually lead to the collapse of the German economy and the French economy. And if these two economies collapse, European Union will actually cease to exist. Now, in order for you to understand what's happening, let me give you the facts. Let me tell you what exactly is happening with the European economy, and you will judge for yourself how bad the situation have gotten in the EU. You see, if you take a look at the trade between the two countries, between the United States on one side and the European Union, the EU sells around $723 billion to the United States. On the other hand, they buy around $600 billion in goods and services. And that creates a real deficit of $130 billion. That's something that Donald Trump does not like, because if you guys want to trade with the United States, please be polite and buy as much as we're buying from you. And if you don't know what to buy, I can clearly see that you guys have a problem with your energy. So why not buy more American oil and gas? Especially when Trump now wants to actually boost the US economy. And by buying more American oil and gas, that will create more jobs in the United States and more money will be flowing into the US Treasury. But that's actually a serious problem for the European Union, because the EU is not in a capacity to buy more oil and gas from the United States. The EU is already facing a serious problem. You see, if you take a look at the energy prices in the EU, they don't really have a lot of resources like the United States. The United States is energy sufficient. It has a lot of oil and gas, but that's not the case in the European Union. And prior to 2022, they used to buy most of their oil from Russia. However, because of the conflict in Ukraine, what happened is that those contracts have been actually dismantled and they no longer buy their oil and gas from Russia. And what exactly they imported from? Exactly. It's either the United States or Middle Eastern countries such as Qatar. But the problem with the US gas is that it's much more expensive than Russian gas, because Russian gas was actually being transported from the deep side of Siberia through pipelines into the heart of Europe. But if you want to bring those gas from the United States, then you have to ship them in huge tankers that cost much more, and then you have to build the entire infrastructure in the European Union that they don't have. And now, because energy prices are already super high in the EU, you don't have extra tens of billions of dollars to invest in such an infrastructure project. And another thing you have to keep in mind is that look at the French government. It has actually collapsed. And the reason is very simple. They couldn't actually agree on terms because the economy is doing so bad. France is actually full of debt, and they have to do something, first of all, with their debt, and secondly, with their economy. And what do you think is happening on the other side with Germany? Exactly. The German government collapsed because they couldn't actually pass a bill. There was a $60 billion shortfall in the budget they wanted to pass, because they wanted to keep supporting Ukraine and invest extra money in energy. Because you see, you have to take a look at it from the European perspective. They're actually waiting for the war in Ukraine to actually end so they can actually start buying oil and gas from Russia yet again. It's much more cheaper than any other country. Literally, Europe has no other option but to buy oil and gas from Russia in order to make their factories much more efficient, and they will be able to compete against other countries across the globe. And now with Trump saying that, listen guys, you want to actually keep trading with us? Buy more oil and gas from the United States, which means that overpay for oil and gas yet again, even though that the conflict in Europe is over. If you just take a look at the list of countries that pay the most for energy, you quickly realize that nobody pays as much for electricity, for example, as European countries. Italy is at the top of the list. Then you have Ireland, Denmark, Belgium, Germany, France, Netherlands. And all of these countries, guess what? All of them are part of the European Union. Now, just to truly understand how much they pay more compared to other countries, Take a look, for example, at a country such as China that pays a fraction of that. Even the United States pays far less than most of the European countries. And that's why they want to go back to keep buying Russian oil and gas. I'm not really sure what are going to be relationships between the European Union and Russia when the conflict is over, because Trump made it clear that he's president, he's going to end this war, right? So that at least creates some hopes in the European Union that they can actually lower down those energy prices. But Trump is like, listen guys, don't be happy too soon, because you are going to keep buying American oil and gas because we are going to pump as much oil as possible. And why do we have to do that? Oh, because first of all, we are protecting you, and secondly, we are running a huge deficit. You are short of $130 billion. You don't know what to buy? How about if you buy more oil and gas, especially when you need so much energy in the first place? So that scenario where the conflict in Europe is going to be over and energy prices will go down, that is not going to happen anytime soon as long as Trump is president. You see, European Union is a recent project that started literally like 30 years ago. And since then, it has been going through one crisis after another. And all of these crises has been accumulating over time. And unlike the United States, for example, which is literally like one country that consists out of many states, and then you have a very strong federal government in Washington, the European Union does not have something like that. Yes, it's very similar, but every single country within the Union has their own constitution. It's an independent, different country, even though they have a lot of similar laws and they have like a federal government such as the European Union. So back in 1999, they created the euro, and every single country should have a currency that would reasonably represent their economy. So if a single country is actually suffering, what they will do is that they will devalue their currency. Suddenly their exports will become much cheaper. More people will be coming to that country, boosting tourism. Their exports are going to increase, and over time they will fix their problem. But in the case of the European Union, you have very strong countries such as Germany, that is a manufacturing powerhouse with a GDP of like $4.5 trillion. And then you have Greece that has the exact same currency as Germany. But Greece doesn't literally produces anything. It relies on tourism, and it's full of debt, and is actually suffering tremendously. And that's what creates actually this imbalance within the entire European Union. And a lot of people are not happy with that currency. And to illustrate that point, just take a look at what happened in 2008. 2008 was a serious crisis in the United States. The stock market fell, a lot of banks went bankrupt, everybody was actually screaming all over the place, and the federal government had to jump in, print trillions of dollars, and bail out most of these banks. People witnessed how their home prices fell by 30, 40, in some cases by 50%, and that is actually devastating when you see that you no longer has a house. But if you actually pay attention to what happened in Europe, the crisis in Europe was way worse than you can imagine if you are watching this from the United States, because most of these countries in Europe are still suffering from the consequences of the 2008 financial crisis up until today, even though that almost 2 decades has passed since then. Take a look at Greece. They're still paying off their debts, and they will probably keep paying off their debts from the 2008 financial crisis for the next 10, 20, or maybe 30 years. Italy, Spain, Portugal, Hungary, and even Germany is still suffering to a certain extent. Maybe not as much as France, for example, because France still has a debt to GDP ratio of over 100%. And one of the fundamental reasons that happened is not just the pandemic, but rather the 2008 financial crisis. Then in 2011, there was a migration problem, since there was a lot of conflicts in Middle East and millions of people had to find a place to stay, and they marched into Europe. And just imagine for a moment that you just had one of the worst crises in your entire history, and then you don't have the money to actually help your own people. You don't have the money to bail out, to pay off your debt, and you have like millions of people marching into your country, and then you have to kind of keep them somewhere. You have to provide them with shelter. You have to provide them with food. Why? Because part of the reason there is a conflict in that country is because you're part of NATO, and NATO played an important role in actually creating those conflicts in all of those Middle Eastern countries. So that was another problem, spending billions of dollars that you don't have in order to kind of provide a place for those people. Of course, it was also beneficial for Germany that has a serious demographic problem. So a couple of million of young people into your country is something that is going to kind of improve your social security system. And then we have what? The 2020 pandemic that forced most of the European countries to print trillions of dollars to force people to stay at home. If people are not going to stay in their houses, if you're not going to pay them to stay in their houses, you've been screaming about democracy and human rights all this time, and now you don't want to pay your people to stay in their houses and you want them to use their savings, well, that's not happening. You got to actually keep them, provide them at least with some kind of a form of paycheck in order for them to stay in their houses, and the pandemic will be over. That is why most of the EU countries have so much debt that you cannot possibly imagine. And unlike the United States that has the global currency reserve and it's a manufacturing power, it's not a manufacturing powerhouse, but the United States is the world's largest economy and it can actually afford something like that. But most of the European countries are not such a powerful economies. Maybe Germany, but even Germany has probably some of the lowest debt levels in the entire European Union. And that's why the 2008 financial crisis and the crisis that happened after that devastated European economies to the point where they haven't actually grown at all since then. I just wanted to take a look at this graph and you quickly realize that, wait a second, the rest of the world was growing, but European economies haven't been growing. And just to give you a few examples, this is Italy. GDP in 2023 was $2.2 trillion, which makes it one of the largest economies in the world. But now, let me ask you a simple question. What do you think the GDP of Italy was in 2008, right when the crash happened? It was $2.4 trillion. Wait a second, something is wrong here. So the GDP in 2008 was higher than it was in 2023. So what was Italy doing for almost 15 years? Nothing. It was pretty much trying to recover from the 2008 financial crisis. So the GDP didn't actually grow by 2 or 3% every single year, but rather it has actually shrunk over a period of 15 years. Take a look at Spain, for example. What do you think has happened with Spain? The GDP in 2008 was $1.6 trillion. Today, it's also around $1.6 trillion, maybe less than that. Take a look at France, which is the second most powerful economy in the European Union. The GDP back then was $2.9 trillion. Now it's a little over $3 trillion. So you can say that most of these major economies haven't grown at all. Take another example. A few countries that actually saw their GDP or their economies grow are smaller economies within the European bloc that don't really represent the European Union, such as Sweden, Denmark, Finland. Now, I'm not saying anything negative about them. I don't want to be misunderstood, but I'm simply saying that these are smaller economies that don't literally hold the European Union together. It's Germany, France, Italy, and Spain probably at best. These are like probably 4 countries that make up the vast majority of the European Union. The only example that I can give you that from the European Union where the country kept growing is Germany. And it didn't really grow that much that I can actually brag about it. Just like what? It's now $4.5 trillion and it was $3.7 trillion. So if you compare it to a country like India, which was one of the poorest countries in the world, and it's still one of the poorest countries, you can see that probably in a couple of years, or probably next 3 years or 4 years, India is going to overtake Germany and will be a much larger economy. And now I want you to understand something, is that if you are not growing your economy, if you're not building, if you're not innovating, if you're not growing up, the rest of the world isn't just sitting out there and watching that you're doing nothing. The rest of the world, on the other side of the world, is trying everything possible in order to overtake you. That's how everything works. It's a real competition. So let's see what was happening to other economies. An example, United States. 2008, the US economy was around $14.7 trillion. In 2023, the US economy is around $28 trillion. Now, you can say that it's fueled with debt. You can say that the US owes so much money in the first place, but that doesn't matter. The US economy almost doubled since 2008. Because compared to the European economies, they also have as much debt as the United States if you actually compare the debt to the GDP ratio. Take China, for example. In 2008, it had a GDP of $4.5 trillion. Now in 2023, it has around $18 trillion. It has more than grown its economy by around 300%. So that is the problem with the European Union. Because they have been actually trying to get themselves together all of these years, the rest of the world was catching up, and now the European Union is losing its competitive edge in their economies. And to illustrate to you the point of how bad the crisis has gotten is that take a look at the interest rates in the European Union. Yes, right now they are pretty high at around 3%. Even 3% is nothing, because in the United States, they're on like 4.5%. So even though that interest rates in the EU are lower, still the EU economies are not growing that much. But that's absolutely nothing compared to what you see has been happening prior to 2022. You see, back in the days like in 2020, the Fed has lowered the rates to around 0%. And what has been happening in the United States? People borrow money, people start businesses, people buy houses, people invest in assets. You have businesses borrowing trillions of dollars, as much as they can in order to grow their businesses, to open up new projects. Now, a lot of that money was spent on nonsense. A lot of scams have actually got out. A lot of companies wasted that money. But nonetheless, the US economy kept growing. Even world's largest companies such as Apple, Amazon, Microsoft also borrowed trillions of dollars to invest in new projects. However, take a look at the interest rates in the European Union. They have been at around 0% since like 2014. And at some point, they even had like negative interest rates. Can you imagine for a moment when you have negative interest rate? What exactly that's supposed to mean? Like, I'm going to borrow money and you're going to pay me for borrowing that much money? And people still don't borrow money? Isn't that insane how low interest rates have gotten in the European Union? And still, with such a low interest rate, European Union couldn't actually grow their economies. And if you actually take a look at the numbers, they're still bragging about the fact that, oh, at least we didn't cause deflation in the European Union. Yes, maybe deflation is a much bigger problem compared to inflation, but your economy is suffering so much that even lowering rates to like negative percentages didn't create an economic boom. Maybe there is something fundamentally wrong within your economy. Maybe you are actually doing something wrong in the other side of your economy. And that's exactly what we'll be taking a look right now. You see, if you kind of pay attention at what makes the EU economy so strong is the fact that European countries are really good at manufacturing high technology. It's not something that every other country can do. If you have oil and gas, you can extract oil and gas. If you have gold, you can actually extract gold. Even if you want to actually create factories where you create aluminium, nickel, or anything like that, in order to do that, you need factories. But in order for you to create high-tech manufacturing, you need skilled people, you need experience, you need all that knowledge. And that's not something that every other country can pull out. And if you take a look at the history of the EU, you kind of realize that that's what makes the European Union so powerful and so rich. Now, I'm not going to say anything about the historical fact that a lot of wealth was accumulated from other countries when most of these European countries were empires, but nonetheless, in the last 100 years or so, they've been mostly focused on being industrial powerhouses. So one of the major industries in the EU is the automotive industry. So you have countries such as Germany, France, and Italy producing cars. You have Porsche, you have BMW, you have Audi, you have Volkswagen, you have Mercedes. What kind of a car would you want to buy? An American car or a German car? I bet that most of you will buy a German car. Like, nobody would actually choose a Chevy over a BMW. Nobody would choose a Ford over Porsche. Of course, these are different price categories, but nonetheless, why is Porsche, why is Chevy, why is Ford not producing as great quality as BMW? And that's something because you need experience, you need a lot of resources, you need high-tech manufacturing in order to make that possible. And that's something what the European countries are very known for. Now, another industry that is very popular in the European Union is aerospace. So we have countries such as France, Germany, Spain that are producing Airbuses. There are two companies that produce pretty much like 95 or 98% of all the commercial planes all across the globe. Boeing, which is an American company, and then we have the Airbus. And Airbus now is more even popular than Boeing because Boeing has lost the competition after creating a failed project. I think I don't really remember the exact name of the plane, but it crashed a few times and they had a few problems with that. And that's why most of these companies or airlines that had orders from Boeing, they canceled their orders and now they're shifting to Airbus, which makes, Airbus probably right now the most successful aerospace company in the world. Another industry that is very popular within the European Union is, of course, machinery. So we have companies such as Siemens that provide or create those tools for high-tech tools or machinery for other factories, for hospitals, for different kind of countries. And that's not something a lot of countries can pull out together. Even the United States relies a lot of European machinery for its factories. So you're building kind of robots or tools for other factories for across the globe. So this is what made European Union such a manufacturing powerhouse across the globe, and nobody could compete with the European countries because in order to pull out something like that, you need like decades or centuries of experiences of economic growth. You need the capital to do that. But because over the last 2 decades or so, European countries were busy keeping themselves together and surviving from one crisis after another, guess what happened? China stepped in and took over in charge of all of these industries. Even if you take a look at the exports of Germany, what do you think Germany exports? Cars, railway, trams, machinery, nuclear reactors. The same thing goes with France. Nuclear reactors, cars, trams, and equipments. And China stepped in and literally crushed all of the EU companies in their own industry. And it became a manufacturing powerhouse. 20 years ago, if I would tell you made in China, I would make a joke out of it because China used to produce low quality products. But that's no longer the case. China made a plan that in 30 years, they're going to lead the world in high-tech manufacturing. You see, China is not competing with the European Union. China has their eyes on the United States. They want to become the world's largest economy. They want to become the leader in the world, but in order to do that, they still have to innovate more. They still have to catch up with a few industries. And it will take probably China another 5, 10, or 15 years. I can't tell you for a fact. But in those industries, European Union is not a leader. The EU was a leader in high-tech manufacturing. And in order to catch up with the United States, China first had to become a leader in high-tech manufacturing. So they literally just overthrew all of the European companies. Let me give you a few examples. When we talk about cars, yes, German cars are still the best when it comes to gasoline cars. But around 25 years ago, German cars made their bet on diesel cars. They thought that, diesel is not as bad for the environment as oil, for example, or gasoline. But that's not what the Chinese people did. They realized that the future is electrical cars, and they spent billions of dollars, probably hundreds of billions of dollars in order to be a leader in that. And if you now go to 2023 and take a look at the numbers of cars sold, of electrical cars, BYD has overtaken even Tesla, which is probably the most popular electrical car brand around the globe. Of course, we have like BMW, we have Volkswagen, you have Mercedes, but they are very small players. And this gap is only going to rise with every single year. Guess why? Because Europe does not have the infrastructure to build so many EVs. And for them to catch up with China, it will take them like 10, 15, or 20 years. And if they had the money to do that, if they had the time to do that, that's not a problem. But right now they have so many crises. And now Donald Trump is like, listen, guys, you don't have the money? I don't care. You still have to buy more American oil and gas. Do you see the problem? Instead of investing in this, instead of investing of trying to catch up with China on electrical vehicles, they have to buy more American oil and gas because China was one of the largest markets for German cars. Like China represented a third of sales of Volkswagen, but now China has overtaken in sales in domestic market and they're coming to European Union and pushing away German auto manufacturers from the European market because they cannot compete with them on price or even the quality. Now, another thing to pay attention is, of course, batteries. China has dominated the entire battery market by having a monopoly. 77% of all the battery manufacturings, of all the batteries that are being produced across the globe, are being produced in China by Chinese firms. So if German manufacturers, if French companies, if European car companies want to compete with China, they first need to have like an infrastructure where they can actually produce batteries at a cheaper price than China can do. If you take a look at the price of the electrical cars, you find out that the battery makes up like 70 to 80% of its cost. Unless European car companies will build an entire infrastructure to produce their batteries domestically, they stand zero chance to compete with China. And batteries aren't just about electrical vehicles. Every single piece of technology has a battery, which means that they will keep losing a competitive edge when it comes to machinery, when it comes to electrical equipments. And up until today, we didn't really see this gap growing because this technology became relevant recently, but Chinese people have been working on this technology for such a long time to have a competitive edge. Now, another example, take high-speed railway. If you go to Europe, Europe is known for its high-speed railway. So you can take a train from Amsterdam to Paris, from Paris to Barcelona. And it's really great, it's really efficient, it's really fast. And Europe was actually bragging about the fact they've been supplying the world with their high-speed railway, right? Another country that was popular about it was Japan. But now China stepped into the game and now they're building high quality, high speed railway at a fraction of the price and now supplying European countries with their high speed trams. And you can clearly see in the number of high speed railway has been being built by every single country. There is literally no competition between any European country and China. And these are just a few examples I just wanted to give you how China is obliterating entire European economies with their high-tech manufacturing. Now, the problem is that European Union has lost the battle for the tech. You see, if you kind of blame the United States for outsourcing its manufacturing, you have to understand that United States is the world's leader when it comes to technology. Most of the tech companies around the globe that are innovating are American companies. You have Apple, you have Amazon. Yes, they have outsourced their manufacturing probably to China, to Vietnam, to India, but nonetheless, America has won the battle when it comes to technology, and China is catching up. If I would tell you, think of any tech company, you're probably gonna think about Apple, Microsoft, Alphabet, Amazon, IBM, Oracle, Nvidia. And all of them are US companies. If you think about Chinese tech companies, you quickly realize that China has an alternative to every single American tech company. Tencent, Huawei, Xiaomi, ByteDance, which is the creator of TikTok, if I'm not mistaken. I can be wrong here, of course. You can double check me with that. But nonetheless, China focuses on technology companies, and there is a battle between US companies and Chinese tech companies. And now I want to ask you a very simple and straightforward question. Where are the European tech companies? They don't exist. Yes, there are a few examples such as ASML or maybe Spotify, but they're not like real examples, like real tech giants that can compete with companies such as Apple, Amazon, Microsoft, or anything like that, or any kind of Chinese companies. They don't exist at all. And that's the real question, because European Union hasn't been focusing on creating business-friendly environment in order for tech companies to thrive. They've been too comfortable for such a long time that they haven't created a single tech giant that could go and compete globally with any kind of American tech company or a Chinese tech company. They don't exist at all. But back in the days, like if you just go back to the early 2000s, that was not the case. Like I remember like Nokia dominated the entire phone industry. But besides Nokia, we had Siemens. We had a couple of other European brands that had real influence in the market. Even Philips back in the day was like a tech company, but it's no longer a tech company. And part of the reason behind that fall was that overregulation. Over the last 2 decades or so, European Union jumped in and they started cracking down on the big tech. They tried to actually squeeze everything possible out of them, and they created an environment where it's very difficult to actually work. It's very difficult to grow a business. It's very difficult to start a business. I'm not saying it's impossible. And I'm not saying that high taxes are always bad. That's not what I'm saying. But when you have super high taxes and you have very highly regulated market, people are going to look around and they will see, wait a second, where exactly should I start my business? In the United States or the European Union? Of course, you will start your business in the United States. And now with the rise of other places, people go to Singapore, people go to Dubai, people go to Southeast Asia to start their businesses because it's much more business friendly. While in the European Union, you have so many regulations that's going to cost you so much to do that. Now, another problem that European countries have that they're more like socialistic countries. And right now, I don't just mean, for example, the Scandinavian countries such as Finland or Sweden, but just take a look at France. France's public sector accounts for around 60% of its GDP. Without kind of the public sector in France, the French economy doesn't exist at all. You need to build an economy where the government plays a very small role in the economy, and most of it is being driven by the private sector, by private investments. But you don't have private investments. The fact that 60% of your GDP is represented and driven by the government simply tells you that your government or your country, your economy has very, very limited private investment. And in order to do that, in order to change that, maybe you have to change some of your laws. Let me give you an example. If you take a look at the labor rights in the European Union, they have some of the best rights out there. And I'm not saying that you should treat people horribly. I'm not saying that you should kind of underpay people. That's not what I'm saying. But imagine you're starting a business, right? And starting a business is not easy. Like, there is nobody that will come and give you money. It doesn't work like that. You have to build a product, you have to build a service. And if it's a huge business, you will have to actually rent a place. You need to kind of open new branches. And all of that requires a lot of money. And if you are an entrepreneur with very limited money, it's very difficult for you to do something like that. But when you kind of literally cannot just fire people and you have to give them very, very good reason, and if you don't do that, they can sue you back. If you have to kind of still take care of them after firing them, then it's very difficult for you to actually hire people, grow your business. Yeah, maybe you can do something like that with huge businesses. And that's why businesses usually grow like outside the EU, and then they will come to the European Union to simply grow their businesses because they already have the money to fight all of those, let's say, nonsensical regulations that the EU has passed. And in order for you to kind of build a business-friendly environment for businesses to come to you, you will have to change this. You will actually have to give more rights to businesses. I know that some people might not like that. Some people will actually say that is bad. Millionaires, billionaires are making so much money while the average people is not making so much money. But the average people is not going to build a business. The average person is going to be average. So if you want that average person to become a billionaire, if you want that average person to become a millionaire or a business person, you have to create an environment for that average person to have the motivation to work more than everyone else around him in order to succeed and provide jobs for them. And if you don't do that, then you will not have business people in your environment and you will lose the tech battle just like the entire European Union did over the last 2 or 3 decades. The real question is that what is next for the European Union? Now, one of the most important things they can do is that they can deregulate their markets in order to make it more business friendly. You have so many rights for your employees. I'm not saying get rid of them, but make it in such a way that when someone wants to start a business, it's much easier for them to start a business. Get rid of a lot of taxes for those businesses. Let them hire who they want. Let them fire whenever they want until at least they reach a certain level so that people will be incentivized to do that. Right now, there isn't really much of an incentive. I'm not saying that nobody's going to start a business, but there are plenty of places all across the globe where it's much easier and much better that have a much friendly business environment for people to go there and start businesses, unlike most of the European countries. Another thing they can do or should do is devalue their currency. This is one of the things that you do because, I mean, if your economy is suffering, then your currency should be devalued. And now because your currency is cheaper, your exports become cheaper and people will buy your exports much more than other countries, and slowly there will be more demand for your currency and your economy keeps growing. And that's basically the basic logic of how economies usually grow. However, European Union cannot do that because there is one currency for so many countries all across the European Union, and I don't think other countries will agree, even though it might be in the benefit of some other countries. But if they devalue the euro, then euro is going to lose its credibility, because after the dollar, the euro is the global currency reserve and the most traded currency all across the globe. So devaluing the euro will actually create other threats, which means that that option is not on the table, especially when so much debt has been created with the euro. Since most of these problems are coming out at once, you have high energy crisis, you have Donald Trump becoming the president of the United States and forcing these EU countries to buy more oil and gas from the United States, and then you have most of the European industries being at risk and being taken by China. I don't really think that it is going to survive for a long time, especially the next 4 years, because now Trump doesn't just simply want the EU to buy more oil and gas from the United States, but Trump wants the EU countries to pay the United States for protecting them in the first place. And if it wasn't a situation where EU countries wouldn't have serious financial problems, I would understand that. But now Germany couldn't actually pass a bill because part of that bill was to keep supporting Ukraine. And now they need extra money in order to simply buy oil and gas from the United States. Do you see how many problems it creates? So at some point within the next 2, 3, 5 years, some of these EU countries can say, listen, this is not favorable to us. We don't like these terms and conditions. It might be better for us to leave. And if it's going to be a major EU country, then it could actually be such a big blow to the EU that it might not make any sense. Remember in 2016, the British left the European Union, and it was such a major blow. So if another major economy is going to leave it, such as France or Germany or maybe Italy, it might actually be the end of the European Union, but hopefully it's not going to be. Thanks for watching, and I will see you in the next one.